NSE's biggest wealth creators in the last 1 year with a rally of 1,800%. The stock that we're talking about is Cambridge Technology. Don't get fooled by its intraday chart today when it's down 5%. Pull up the 1-year chart and you can see an 1,800% rally. This is an IT company which focuses on convergence of big data and cloud. It very recently, in fact yesterday, hit a fresh 52-week high of close to about 131. And it's a small company with a market cap of only 225 crore. Mr. Aashish, Kalra, the chairman of Cambridge Technology Enterprises, joins in now. Good afternoon, Aashish. Thanks so much for joining in. I was reading your annual report, and there you've indicated that the company is putting in a business plan and it will take 2 years to realize the potential. So what constitutes your business plan? Where do you see the company headed, say, in the next 2 years in terms of revenues as well as in terms of margins and size?
Good afternoon. Since we took over the company on the 1st of January, we've really focused on, as you said, the convergence of cloud and big data. And we think that transformed the way the world does business. And it's really about looking at P&L of our clients and helping them realize new potential from that P&L, be it in cost savings or revenue growth. The clients tend to be very large corporations, mostly in the United States. And the company Cambridge Technology is very small, it's subscale, and what we said was we wanted to put a platform together and a plan together that involved 3 stages. Stage 1 was to take a business plan and put in the right partnerships. So over the first quarter, we actually entered into partnerships with people like Oracle, Amazon, ForgeRock, etc. There's a dozen odd partnerships. With them we built unique solutions, and those unique solutions, then we started looking at 6 different verticals, and in each vertical we have taken on a client that we are trying to build a solution for. For example, in utilities we're working with Schneider Electric. So all the way from consumption of electricity to how it's produced and how do you optimize that entire supply chain is something we're working on. We're working with a firm called Hillspet, which is part of Colgate, to figure out the next genomics workstations on how do you build new drugs, how do you build new nutrition for pets. We believe 80% of next generation of genomics will be on plants and animals. So that's stage 2. And then we move on to stage 3, which is get into an optimal scale, which we believe is at least 2 million a month in revenue. Let me pause there, and I'm sure you have some questions.
All right. So you were talking about some clients, and in particular, you also spoke about Schneider. So recently, you extended your relationship with Schneider Electric. So can you tell us what exactly is the nature of work that you do for Schneider, and what is the quantity of revenue, or what is the quantum of business that this particular client generates? At the same time, can you tell us what quantity of your total business is being generated by the top 5 clients for the company?
We have some strict confidentiality on what we discuss about clients, but in broad strokes, what we do for a client like Schneider is we work all the way from figuring out what are their big data needs, how do we optimize the data, what's the visualization, and what are the applications we build around it. So the broad frameworks tend to be fairly large, and they could run in the millions of dollars, but then each thing gets broken into what is called a statement of work, and typically those run into a few $100,000 each, right? And you do it incrementally with each client, and it gets to be different with each client, right? But they tend to be very long-term relationships. They tend to be 3, 5, 7-year relationships because you're taking on fairly substantial amounts of work.
But give us some sense of, what could be the potential revenues or the revenue size of the company in the next 3 years, and what would be the margin range that you believe you can sustain in your 2-year, 5-year plan? Some numbers to work with.
Sure. What we have already given as guidance is we believe our 2-year plan is to get to a minimum revenue of 2 million a month. We believe margins will be somewhere between, gross margins will be somewhere between 60 to 80% on that. We are suboptimal today, so we are at the lower end of that. But if you see in the last 2 quarters, revenues have increased roughly 100% quarter on quarter from 2014 to 2015. Margins increase 500%, what I call Q1, I think it's Q4 of last year, and Q1 of this year was 800%.
What about
it should be in line.
All right, what about at the EBITDA level? Gross margin 60 to 80%, but at the EBITDA level?
Yes. At the EBITDA level, I think the increase has been even larger.
No, your
I believe,
guidance.
I think you should be somewhere in excess of 30 to 30% at least, if not 40%. The big challenge right now we are facing is not clients, is actually finding the right talent and working with the right people. We are fortunate attrition rates are less than 0.3%. But we are growing, we have roughly 250 people. We are growing the company. We hope to be somewhere between 500 and 750 next year, right? And to find the right talent, to train them, to get them to the next level, we're spending a lot of money on the competency centers in the United States. And as a group, we've taken other companies public in the US, and we've done fairly well there.
Right, so thanks a lot for joining us. Unfortunately, we've completely run out of time on this one. That was the management of Cambridge Technologies indicating that 2 years later, the EBITDA margins will be somewhere close to 30 to 40%. And the stock has seen a bit of a spike in the last 5 minutes itself, up about 4.5%. It was down 5% ago. So that's all the time that we have.